The audit of financial statements of a school also involves certain challenges. Firstly, most of the schools do not have capacity to prepare their own financial statements. And as a result, practitioners, when engaged to audit or examine the financial statement of a school, find themselves in situations where they are merely given a box with bank statements, invoices, and checkbooks and are expected to produce an audit report. Based on our understanding of our responsibilities in terms of the auditing standards and the Code of Professional Conduct, a member would not be allowed to self-review because that threat is so significant it could influence your decision on the engagement you've performed on the financial statement. Therefore, where members are met with a situation where the school does not have capacity to prepare their own financial statements, which is in many instances, members would need to take into account a detailed assessment of the self-review threat that comes with them getting involved in the preparation of financial statement. Firstly, the code helps us in terms of making sure that we apply safeguards in those instances. The first one, you could actually eliminate the threat altogether, or you could reduce it to an acceptable level. The elimination of the threat, which is the first choice, is one, you could actually as a member, when engaged to perform an audit or an examination of a school, you could require that the preparation of the financial statements be outsourced to another practitioner to prepare the financial statements, so you can maintain your independence and objectivity to be able to get involved in the engagement. Secondly, as a member realizing that the school might not even be in the position to manage the engagement process, you could engage to do a compilation of financial statements where you would be able to do the compilation and another practitioner would then be able to do the examination or the audit of the financial statement of a school. There is also an option of reducing the risk to an acceptable level and ensuring that the self-review threat is safeguarded sufficiently. And that usually is done where firms that are usually of a large size are able to separate, indicate clear segregation between the team that does the preparation of the financial statements and the team that is involved in the audit. This approach is really cautioned against because a lot of firms involved in the audit of schools are actually small and medium practices. And in that instance, it becomes very difficult to indicate at an operational level how you split the responsibility between the team that prepares the financial statement and the team that does the audit or examination of the financial statements. So it's very important for us to take note of that. Lastly, as much as the audit of financial statement of a school refers to the financial statements, there is still a compliance element that needs to be taken into account. The school is still required to comply with financial management and reporting requirements in terms of SAICA. For example, the school is required to have one bank account by law, and they are allowed to have one additional bank account in instances where they would be investing surplus fund with the approval of the member of the Executive Council. Therefore, where a member is engaged to audit or examine the financial statement of a school and becomes aware of a school that has more bank accounts than those approved, it is the responsibility of a member to raise those issues as non-compliances. Another example of a non-compliance is the payment of additional remuneration to employees of the Department of Education, especially around teachers, and the principal of the school might be paid additional amounts for the work that they do. The Act allows the school to pay additional amounts to state employees only with the approval of the employer. This means you cannot pay additional remuneration to a school principal without the approval of the Department of Education that appoints them. The requirements is that payment must also be presented in the budget that is presented to the parents, and the parents must approve it. So to the extent that you are performing an audit or an engagement and you become aware of such an instance, you would have to activate the reporting responsibilities in terms of non-compliance with laws and regulations, evaluate whether this could be a reportable irregularity, and also just discharge the general responsibilities of reporting findings that have been identified during the audit or examination of the financial statement. So it's very important as well that practitioners are aware of schools that have SGB appointed staff members. So schools have got normal teachers, but some schools, especially fee-paying schools, appoint additional educators, administrators who are classified as SGB appointed teachers. It's very important in that instance that practitioners are aware that the school becomes an employer and has all the responsibilities that come with being an employer in terms of the SARS requirements. Therefore, they have to register for PAYE, they have to register for UIF, and in many instances, schools are not registered for those requirements. So if an auditor or an examiner is engaged in the school and they are aware of staff costs other than those paid by the Department of Education into the school, it's very important that they start asking questions around the registration with SARS and the amount of PAYE that is due. So that is just the final part of the audit. So over and above, firstly, understanding the guidelines for financial reporting in the province, ensuring that you are doing the right engagement in that an audit is the primary engagement that should be performed on the financial statement of a school. Only in instances where it's not practicable, then an examination can be performed. An examination includes a review or an agreed upon procedures engagement. The challenge with an agreed upon procedures engagement is that in many departments, in many provinces, the requirement is that you reach a conclusion or an opinion on the engagement you've performed, which an agreed upon procedures will not give. We have also clarified that a compilation engagement would not qualify as an examination for the fact that you are actually just using your knowledge to help the financial statements get prepared of a school. We also have to be aware of the self-review threat that comes with schools that do not have capacity to prepare the financial statements, and in that space we have to apply safeguards to either eliminate or reduce the threat to an acceptable level. And finally, the financial statement audit also includes an element of compliance audit, and an auditor has the responsibility to ensure that there is compliance with SASA and other responsibilities of a school from a legal perspective, such as being an employer and submitting returns to SARS, and also withholding PAYE on a monthly basis and paying it over. I hope you found all the information useful. Feel free to contact us for further inquiries. Thank you.